Alright, welcome back to Orient FX Intensive bootcamp, and this is a continuation to the previous lesson on fair value gaps. So in this lesson, I will show you guys some real chart examples, how we plot it and how we trade fair value gaps, okay? But before that, okay, so let's re-understand once more what is fair value gap and the fundamentals, okay? So firstly, we need to understand that for every buyer in the market, a seller has to be readily available to sell at that exact price. Same thing with your supermarket, right? If you want to buy an apple at $10 or $5, you need someone to sell you at the exact price, your $5, right? Same thing for your stock market. If you want to buy a stock for $100, you need to have a seller that is readily available to sell at $100 to fill your order. Same thing for forex market. It's a transactional market, right? So if you want to sell gold, let's say at $2,000, you need to have a buyer that is readily available to accept to buy gold at $2,000 at that exact price, okay? So what happens, for example, both the market makers and the retailers with 100 lots buy order for gold at 1956, but we do not have enough sellers on the market at that price because maybe no one want to sell at that price, right? And this what happens is it is only able to fill 50 lots of buying orders at the exact price, as an example, right? So there's 100 lots of buy orders at 1956, but only 50 lots of people are selling. There's only 50 lots of sell orders at 1956. So what happens is it creates an imbalance of 50 lots of unfilled orders at 1956. So what happens? This unequal buying and selling pressure will cause these 50 lots of unfilled orders to be filled at the next higher price where people have their sell orders at, right? So this is why you see a big outbreak or an impulse candle tends to happen, because there's not enough sellers or buyers on the market because of unequal buying and selling pressure, right? Okay, so now how to identify fair value gap? Let's start from scratch. I'm gonna remove all of this once more. We will do it from scratch again. Okay, how to spot a fair value gap? What I like to do is always to start on my H4, right? So I always go to my 4-hour time frame. I like to identify my fair value gap. Okay, but first let's go back to fundamentals. What is a fair value gap? A fair value gap is a 3-candlestick pattern sequence, whichever you like to call it, whereas your second or your middle candlestick in the pattern is a breakout or an impulse candle. So what happens is usually within this impulse candle, the wicks of your first candle in the sequence and the third candle in the sequence do not reach out to this zone. So when there is no overlapping of wicks, it's your fair value gap. So it's basically the candlestick. This is a bullish fair value gap, right? So the top wick of your first candlestick, you're gonna draw it to the bottom wick of your third candlestick in the sequence. So this is your fair value gap. Alright, so let's find a bearish fair value gap. Okay, same thing. Now we want to identify this kind of candle, impulse candle first, with large movements, right? So usually when you see a large movement or impulse candle like that, you will be able to find a fair value gap. So in this case, you're gonna take the wicks from the tip of the first candle, the wick of the first candle, to the wick of the third candle in the sequence, and the middle part where there's no overlapping wicks is where your fair value gap is. Okay, so before that, we understand what is the fundamentals already. It's due to unequal buying and selling pressure. So unfilled orders usually get pumped out to get filled at higher levels here, and in this case, unfilled sell orders get filled at lower here because buyers only step in at lower areas. Okay, now before that, the next thing we want to look at is how do we trade fair value gaps, right? Very simple. When you have your fair value gaps, you have to understand what does fair value gaps do. So when there's an imbalance in the market, what prices tends to do is prices tends to reach back to retest or rebalance the market. So after fair value gap, you see prices actually went down and then came back to rebalance, right? So there's two ways, right? Either one, prices continue going downwards to finish the whole market structure movement, or prices could come back, retest, and clear above the fair value gap and mitigate this fair value gap. So this creates two ways of trading, right? So a lot of people has been teaching that fair value gap is a continuation pattern where you look for sells. Let's say this is a bearish fair value gap, prices came back, you look for sells. This is not always the case because sometimes prices could come back and mitigate the whole fair value gap like that. Alright, so there's two ways where you want to look at. One way that I like to look at is look at 50% of my fair value gap to gauge whether there's buyers or sellers in this case, right? So you can just go to the rectangle tool and then you click on this thing called the middle line. You'll be able to see the 50% value of your fair value gap. Alright, so why 50% value is because if prices close with a body above my 50% value, this shows that there's no more sellers left in this fair value gap zone, right? Because with this bearish engulfing candle here, it shows that there's a lot of selling pressure, a lot of sellers here. That's why a fair value gap has been created on this impulse breakout candle. But now, prices has actually pushed back to 50% fair value gap. And right now, it's rejected of it. So this shows that there is still a lot of sellers within this zone here. Right? So I will be looking for sells upon retest. So what you can do is you can wait for the initial rejection, prices come back to retest, you can look for a sell, scalp. Okay, so this is on a H4 time frame. So it's pretty large. Okay. But if you guys can see, if you actually short at here, you have gotten almost a 120 to 120 pips, 130 pips take profit level, right? 120 pips is a lot on the lower time frames. But regarding this is one way that you can look for sells. It's a continuation after you can see that sellers are still intact within this zone. Okay, now let's take a look at the bearish one, right? It's the same thing. You guys can see that with the 50% value is very, very crucial. Why is that so? You guys can see this is our 50% value of our fair value gap on our H4 time frame here. And prices actually came back to retest this zone here. And what happens is prices rejected off our 50% value, showing that there's still a lot of buyers intact within this zone. Prices close above the fair value gap, came back to retest, and this is where I will be looking for entries within the fair value gap area. And stop loss will usually be below the fair value gap area, because if prices close below, it means that fair value gap has been mitigated. So you can do maybe a 1 to 2, 1 to 3, up to you guys, right? But this is how essentially how you use fair value gap to look for trades. But do not just purely trade based off your fair value gaps. Why is that so? You have to always look at other confluences like your support, resistance, supply and demand zone. Alright, so let's give you guys an example. This is on the H4 chart. We have a H4 fair value gap. What I would like to do is always go to my lower time frame as well. Right? So I will go to my H1 time frame. Okay, let me go all the way back first because prices haven't. Alright, here. Okay. Right, so if you go to my H1 time frame here, what do you guys see? You guys actually see that we have multiple mini fair value gap right on our H1 time frame. Here we have a H1 fair value gap here, another H1 fair value gap being created here, right? So what does this show you guys? This is what we call an overlapping zone, right? So when prices actually comes to this zone, overlapping zone could be another confluence of your H1 fair value gap. Alright, another way is what do you guys see here? We actually have a support forming here. So when prices actually came back, you can look for buys because this is one of a support zone forming on our H1 time frame. Number 2, what other confluence can we look for here? Not only fair value gaps, not only support, right? We can actually look at order blocks, right? Because order blocks, this is our order block before the start of a new trend reversal. So we have an order block here, and prices actually held very nicely above this order block. What does it create? It created higher highs and higher lows, showing that we are in an uptrend. So we should be following the trend buyers looking for buys. So this was the start of the trend where there's an order block, and then we have a higher high created, and then what happens? We had a higher low created, and then higher high created here. Prices came back, higher low created, higher high, higher low, and then what happens? Prices came back, push back all the way up, right? So this gives us a structure that shows us that we are still in an uptrend because higher highs are continuously getting broken, so that we are still currently on a uptrend, right? We are still currently on a uptrend. So now prices has retaken. So what happens is this was our previous higher low created, right? And what happens was we had a market structure shift here. So what happens is prices push up, create a new higher low here, created a new higher high, but this time market actually pushed down and mitigate our H1 fair value gap here, right? It actually mitigated this H1 fair value gap here, which shows you that this H1 fair value gap is not in use anymore, so we can delete it. It's mitigated, right? But however, we are still within our H4 fair value gap here. Now, we actually created a new low here, but we rejected off the 50% value of our H4 fair value gap, which is more significant because it's on a higher time frame. And now prices actually push up, holds above and closes above, right? You can see that prices rejected, push up and closes above. The body closes above this previous low. So what is this? This is what we call a market structure shift, all right? So in this video, we are not just going to talk about fair value gaps. I want you guys to understand the different confluence and analysis that I take to take a trade and the confirmation I take, right? So now, this was the previous low, prices break through and then now come back and close below this low. So we had a market structure shift here, showing that we still have a bullish momentum towards the upside. So what happens is, when prices came back, I will look for a long position on our new fresh support zone, as well as we are still intact with our H4 fair value gap zone. Probably do a 1 to 2 or 1 to 3 take profit level. Make sense? This is one way you can trade. This is what we call a continuation trade on fair value gaps, but with different confluence as well to increase the higher probability of your trade. Okay, now let me give you guys another example of what happens when you trade fair value gaps the wrong way, right? So let's go back to our 4-hour time frame. Okay. Okay. Right, so let's go back all the way here. Okay, this is one example of what happens when your fair value gaps get mitigated, right? So what happened here? This was a fair value gap, am I right? Because we had a fair value gap created on this impulse breakout candle here on the H4. But what happened? Same thing, we look at our 50% value here. And then you will understand why this 50% value of your fair value gap is so important. It's so important in monitoring price action. As you can see, what happened was prices created an impulse while prices came back here. So a lot of people will look for shorts here at the 50% fair value gap area, but for me, I will not. Why is that so? We have to understand that we are currently in a bear trend. Yes, correct, you will look for sells, but what we do is let's plot our order block zones first. This is our order block, the candle before the impulse breakout that we talked about in the previous lesson, right? So we had an OB zone here and we have a fair value gap here. But what happened, if you guys realize, the 4-hour candle body closes above this 50% value of the fair value gap. So what does this show? So instead of doing a continuation trade of sells downwards, right, this is what people tend to do, right? They thought that, oh, now prices came back to the fair value gap, I'm gonna look for sells and then we stops above the fair value gap to target our support zone, right? But what happens? Prices got stopped out. Why is that so? Because they didn't realize or didn't monitor that your candle body has already closes above your 50% fair value gap. This shows that most sellers which are here, orders has been filled and they're already out. They're not interested to sell again at this price point. And then as you guys can see what happened, prices actually close above and mitigates this fair value gap, right? So sometimes you can look for buys within, right, to mitigate the fair value gap as well. Because you guys have to realize that price action is still the king, right? You can see that bullish engulfing candles are forming within the fair value gap, break above the previous order block. So what happens when prices break above the order block here? This gives you another confluence, right? That prices are actually doing a very strong bullish upturn in the market. Reversal already. There's a strong reversal in the market right now. So will you be selling in this market? No. You know why? Because your previous high here has been broken as well, right? If you guys can see here, the previous high has been broken, creating what we call a market structure shift or or change of character, right? Your CHOCH. Okay, which we will be talking about in our next lesson as well. Okay, so don't worry. So sometimes you see fair value gap might not always be a continuation because many people have the common misconception that every single time prices came back to retest, rebalance the market, it will be a continuation down. No, that's not always the case. Prices could continue pushing up and then instead of going down, it mitigates your fair value gap and then your 50% zone tends to serve as a support zone to continue to push back up on a reversal trend. So always look at your other time frames, your multi-time frame analysis, your other confluence, look at your economic news on factories, read your data, market sentiments and things like that. Alright? So, okay, with that, this is what I have on how you guys can look to trade fair value gaps and how you can use it as a confluence to support your other confluence like market structure shift, market structure, trend buyers, support resistance, supply demand, order block zone, things like that, right? Your liquidity as well. So fair value gap can serve as either a take profit level where you guys can look for example, when there's a fair value gap here, you can look to take profit as a take profit level if you are shorting, right? Let's say you are shorting here because you see resistance forming, right? You see we have a resistance forming here, so but we have a fair value gap here as well, so you can look for short opportunities to retarget your fair value gap as a take profit level, right? So a fair value gap can also serve as a take profit level for your trades, not just only continuation level, right? Okay, so with that, I would like to end this chapter off for you guys. Hopefully you guys learned something new. Don't worry, this entire Forex Intensive Bootcamp is very chill, very light-hearted. We are just doing it. You can see we don't have much setups and editing, right? It's very, very raw, right? This is the vibes that we want to give all very raw, very transparent with you guys, hoping that you guys gain knowledge and value from us. Alright, with that, thank you so much for watching our lesson 3 on more in-depth about our fair value gap, and we will see you guys in the next lesson.